Hey everybody, Mike Vacchi, Princetontrader.com here with the evening webcast. So today was the day that the bulls followed through. The lower band ride is over. The weekly pivot was converted. The 50-day exponential moving average, the red line there, was converted. The 9-day simple moving average was converted. And now it looks like the bulls have got a date with the daily midband here, the green line. If you'd have to say tomorrow, if not soon thereafter, we could pull back a little bit, but ultimately you're going to see that daily midband magnetize. We talked about it on the webcast this morning. Upper band, middle band, lower band. Lower band, middle band, lower band. So look, our baseline assumption is still that we are in a sell rallies market. You can't sell a rally without a rally, and we just rallied, okay? Now, as the last takeaway from the daily chart here is the yellow line here, which is your 100-day exponential moving average. We hadn't engaged it since election night back in 2016. If you zoom out to about 30,000 feet and you look down, the move from 88.5 is really just a retest of the 100-day exponential moving average. And I hate to break it to you, but there's nothing bearish about that. There really isn't. There's nothing bearish about it. I mean, I said, 3 or 4 years ago when people were saying, oh, can we do 2,000? We're not going to do 2,000. It's like, look, if you're in the 2,000 crowd, what you want is you want a big old down market to take you all the way back to the 200-day exponential moving average. You want to hold it and bounce, okay? That ultimately will get you to 2,000. You had the big move down to 1802. Actually, that was the second move down. They moved price down here. This was back in 13, 14. Moved back and they tested in October of 14 and breached, but couldn't hold, the 200-day exponential moving average. And off to there, that was off to the races, 2,000 and beyond, 2,000, 2050, 2100. So there's nothing ultimately bearish about testing something like the 200-day exponential moving average or the 100-day. When markets become bear markets, quote unquote bear markets, it's when a 100-day, or more importantly, a 200-day exponential moving average would be resistance. And instead of living above it for years, you live below it for months or potentially years. That's what happened back in 08, 09. Someday, before the moon crashes into the earth, there'll be another bear market, and that's what it'll look like on a chart. So pulling back from an all-time high to the 100-day exponential moving average is just it's a reload. It's a reload. And now the onus is on the bears, the onus is on the bears to hold their ground at the daily midband and at least try to keep it interesting by holding the market in the short term between the middle band and the lower band. So that's what tomorrow's going to be about. Can they do it? All right. So very, very briefly, how do we trade it? Pretty simple. We opened up. We talked about the opening regular session print was 33.25. We talked about a little nano spill down. Caught the proprietary moving average. We did a long setup against 32. They ripped it right away. We ended up getting in around 35s. Most of the room got in around 35. And then we rode that. Some people rode it the entire day. Some people rode it. Some people missed it. And for the people that missed it, we did the second chance long against the weekly pivot, 39.5. You can see it broke above weekly pivot. That coincided with the Friday high. Held it. You had a third chance here that we talked about on the audio, 42 after the 5-minute midband. 5-minute midband tended to hold. And then you had the last look right about 215, low window, plus proprietary moving average, plus a pop back over the 5-minute mid. Took you the rest of the way. up into the close. So you can see trend up day, a trend up day, a day that didn't give you a reason to be short, gave you every reason to find a way in long, and they gave you very, very little heat. We talk about something in the room called rinse and repeat. That's the dynamic that trend days survive with. You get a high, you do a little rinse and repeat pullback. All that does is get weak shorts in this case in and get them feeling good, and then you make them feel bad, and then they dump it and you make another high. Rinse and repeat, new highs. So that's the dynamic that we discuss in the room with regard to trend days. Okay, the advanced decline line on the S&P held about 300 all day. That also helped keep people interested. So pretty straightforward day, one way or the other. Either you got in tune with the market and stayed in tune with the market, or you sat around and fought price all day and you turned your day into a real mess. And if you fall into that category, it's hard on days like this if you're going to fight price. You fight price, you add, you get yourself into a mess. A lot of people that are doing that are trading in a vacuum. If you fall under that category, we would love to meet you. That's all I can really say about that. So hourly chart last week, inability to hold daily mid-band caused the waterfall. We talked about that on the webcast this morning. Lower lows, potential double bottom at 19. That didn't hold, but they did a spike low at 15.75. A couple higher lows after that. We talked and we were right about here. Testing the hourly mid-band, which ended up holding. 22 lower band was going to be key today if we went down. It was all setting up a weekly pivot test. We just talked about how that turned out. It converted, off to the races. Daily mid-band is right up here around 59.60. That's going to be a very big deal tomorrow. What do the bears want to do? They got to get back down below the daily pivot at 45.17, below the weekly pivot. They have to start to fight back. If they can reconvert weekly pivot, then it starts to look like a bear market rally, doesn't it? Then it starts to look like exhaustion again. We can't get over the mid-band. Forget it. And you get that down. That the bears want lightning to strike twice. Okay? I'm also watching the monthly pivot, 24.51.42. That will certainly get a test tonight. In fact, they're trying to test it right now. It's brushing right up against it here. And 47 will be significant as well. It's on one of our proprietary charts. So that's where we stand heading into tonight, into tomorrow. There'll be a morning webcast out. Everybody have a fantastic night. We'll talk then. Trade them well.